Thanks for joining us once again on the Tech Corner. I'm George Tsilis, Senior Markets Contributor here on the Schwab Network. Today we're going to do a follow-up segment on Broadcom. If you want to watch the original segment, which aired back in April, you can click the link above to check that out. And once again, let's talk about Broadcom, which is a top-tier global semiconductor company that specializes in the design, development, and supply of a wide range of semiconductor devices and infrastructure software solutions. Its technologies are used across various applications, primarily including enterprise and data center networking, smartphones, and broadband access. Again, it operates through two segments, the semiconductor solutions segment, as well as its infrastructure software segment. Now, the company's semiconductor solutions business is its biggest revenue driver, with about 58% of total sales. This includes data center switching and routing technologies, most importantly, custom application-specific integrated chipsets, wireless and mobile connectivity system on a chips, as well as fiber optic components. Its infrastructure software solutions enable customers to manage network observability and performance, secure applications across enterprise mainframe, distributed mobile devices, and cloud platforms altogether. Now, mainstay competitors in this space include NVIDIA Incorporated, which you're well aware of, Marvell, Qualcomm, and AMD. All these companies compete in the application-specific integrated semiconductor solution space. Now, in the integrated network infrastructure solutions areas, Broadcom competes with Hewlett-Packard Enterprises and IBM. This is primarily through its VMware technologies. Now, when it comes to unique value, for Broadcom, it lies in its robust portfolio of semiconductor infrastructure software solutions. These are critical for data center networking and AI applications. Its primary technology is focused on supporting massive AI clusters. With custom silicon ASIC chips, these are application-specific integrated circuits, known also as XPUs, which combine processor technologies much like CPUs and GPUs, along with supportive networking. Now, very unique to Broadcom is unlike NVIDIA, which supplies the marketplace with general-purpose chips, XPUs are customizable and designed for specific applications. Additionally, its strong relationships with hyperscalers for custom AI accelerators and its successful VMware integration further bolsters its market position. Now, in most recent news, going back to September 4th of this year, the company posted revenue and sales for the quarter, where it grew revenue 22% year over year to $15.95 billion, and non-GAAP EPS grew to $1.69 per share. Adjusted EBITDA was pretty remarkable, to $10.7 billion, which approximates to an EBITDA margin of around 67% of sales. Now, artificial intelligence is still the driving engine. AI semiconductor revenues grew to $5.2 billion, up 65% year over year, driven by custom accelerators and Ethernet networking. Guidance was also very impressive. For instance, the company is guiding for total revenues next quarter to $17.4 billion. That's up 9% sequentially quarter over quarter, with artificial intelligence revenue up next quarter estimated to be $6.2 billion, up 19.2% sequentially quarter over quarter. Another notable attribute of the quarter was management flagged a $10 billion AI chip order from a new customer, which many suggest may be OpenAI, boosting confidence in the fiscal year 26 AI growth. Now, with Broadcom, there are many positives to consider. First off, the company is partnering with multiple hyperscale customers to support development and now deployment of custom accelerator XPUs to train the next frontier of AI models. In addition to 3 large hyperscale customers for its XPUs, Broadcom has signed another major customer for its AI accelerators, again, suggesting it may be OpenAI. The company forward revenue growth is remarkable, expected to be around 32.7%. This is more than double the 5-year average of around 15%. All the while, the profit growth continues to accelerate. For instance, the EBITDA margin of 54% on a trailing basis is nearly double the revenue growth, which highlights the company's efficiency in generating profits. Lastly, Broadcom also demonstrates outstanding profitability metrics, with net income margin of 32%, which is vastly higher than the sector's 10% average. Now, despite many positives for Broadcom, we have to also address some of the concerns. Broadcom's success in the AI chip market could be overshadowed by increasing competition, which may depress future revenue growth, profitability, and valuation multiples, posing a risk to its current market position over time. This includes competition from both domestic companies as well as international players like in China, where the company generates about 20% of its sales. Despite strong financials, Broadcom's valuation is higher than its peers, such as NVIDIA, which may not be justified given its lower growth and lower profitability potential, which suggests potential overvaluation risk going forward. Lastly, Broadcom's reliance on its custom chip business as a critical growth driver raises questions about sustainability in the long run, as the market's current optimism may not align with the company's long-term growth potential. Now, next, let's talk about the technical analysis picture for Broadcom. Recent price action has been very strong, particularly after earnings when the stock was trading slightly above the 50-day moving average, but is now vastly above that intermediate term level of support. This indicates near-term bullish sentiment is robust, yet price action may be extended. One-year price performance has been remarkable, with the stock up nearly 150%, contrasting a year-to-date increase of nearly 60%. Inclusive of that year-to-date gain is the overall market drawdown that the company suffered from February to April earlier this year. With that in mind, the stock may be facing near-term momentum challenges, as demonstrated by a very steep slope in price relative to a rising 10-week moving average. And the weekly relative strength indicator above 80 suggests the stock may be overbought in the near term. Now, in summary, many of the largest companies of the world use Broadcom's technologies, and the company is an industry leader with a scalable business model. As smaller, more concentrated competitor companies like Marvell work through several quarters of weakness in core end markets, Broadcom, with its wide array of customers and markets served, appears to be positioned for gains in the long run. The company also has a high degree of recurring revenue based on multi-year contracts, both in semiconductors and particularly in infrastructure software, which may help sustain growth and margins in the long run. With tremendous secular growth of AI customized accelerators and networking, Broadcom may continue to sustain strength as AI transforms the global corporate infrastructure for years to come. All right, that's all for this week's edition of the Tech Corner. Please join us again next week. We're going to be talking about Apple Incorporated and highlighting its most recent product launch. All right, that's it for this week's edition of the Tech Corner. Please like and subscribe to the Schwab Network. I'm George Tsilis. We'll see you next week.